What if I was to tell you that prop firms have been designed to capitalize on your greed? What if I was to tell you that prop firms were designed for you to consistently lose and never keep your capital? Well, chances are you've already gone down this rabbit hole and you've either blown some funded accounts and you're still confused as to why you can't maintain one, why you can't keep your funded account. The goal shouldn't be to just get one. That's easy. You can risk more percentage, you can fluke a challenge, you can be in the right trade at the right time, but can you keep it? And the answer is probably no. So in this episode, I'm gonna walk you through the exact steps that you need to be doing to ensure that not only you get your funded account, but you actually keep it. So before we get into these points that's gonna help you stay funded, I want you to consider this. If we know that 95% of traders are not making money and they're not winning, how are you any different? I want you to really think about that. If there is the 5% of the winning traders, what separates you from the rest? What makes you believe that you're part of that 5%? Because if you just look at the trading industry, whether you go on socials, you go on Twitter and things like this, it's very common that traders understand you need a good routine, you need to be disciplined, you need to find a strategy as a profitable edge. The point being is that most of these people that you see, they've got this. They've got the same discipline as you, same work ethic. It's not like you've got an elite level work ethic and they're really, really lazy. Right? So what is the catalyst is I want you to think about. Because if you don't actually ask that question, what's the difference? You fall into that stat of 95% of people losing. Even when you look a little bit further than that and you look at funding firms that release their stats, under a 1% chance of a payout. So what do you have that they don't? What actually separates you? I want you to ask these questions because if you come into this arena with arrogance and you don't think that there is part of you that needs to grow and develop to be part of the 1%, if you like, to get paid out, how are you then expecting to scale with prop firms? How are you not gonna lose your funded account? See, when you look at those stats, otherwise, you're essentially saying that if we look at those big stats where they've audited like 37,000 accounts and there's only under a 1% that are keeping those accounts and making money, even if we went on 36,000, you're basically saying 36,000 of these traders are all stupid, don't have a routine, conveniently don't have access to profitable strategies when there are so many online, even for free, right? So you've got to use your logic and actually understand what the data is telling you. Quite often you'll see traders, they're too arrogant. They think, well, I'm the difference. So you're telling me you're the difference, you have this elite mentality, and everyone else that has access to the same stuff as you just tends to be a little bit lazier and can't be profitable. The chances are there is something standing in the way of you keeping that funded account, and I'm about to walk you through that list. So before we go further into this episode, and if you don't already know, on the 28th of November, the membership prices of Falcon is going up. So you have a unique opportunity to get in before the deadline. Now, we've been working on a lot of things over the past 10 months, and we've completely revamped our technical material. So we're launching with that Falcon Mechanics, which is the all-in-one course. This is going to teach you step by step as I've made the Falcon strategy even more mechanical. So essentially, it has never been easier step by step to follow to becoming profitable. Not just that, the current prerequisite for our in-house fund is 3 months of being a member. That is going up to 6 months. So if that's important to you and you want access to our in-house fund, make sure you're in before the 28th of November. This is something that is a must-have. You cannot just have a trading plan that is every single setup that your system has. This is why it's not actually effective for you to take every trade that meets the plan. You need to carefully categorize risk. So you need to know the trades that you're taking. Are they higher in risk, lower in risk? You can't think that every trade that you take carries the same level of risk. There's market positioning. So this is why I said you need a proven trading plan that accounts for those variables. This is a blend of tracking your data and essentially doing ASR. For those of you that don't know, ASR is advanced self-review. You need to know on a week-by-week basis the trades that you're taking. You need to know how many missed trades did you take. You need to understand the difference, whether they're higher in risk, lower in risk. You need to be doing this self-review every single week. Otherwise, how are you using your data effectively to spot patterns within your own self? You need to be able to look over a period of weeks and go, right, every single month in week 2, do I tend to force positions or not? You might even find data, and we've seen this with a lot of traders, where at the start of every month, the first week of trading, there's a lot of over trading. Why do you think that is? It's not a technical issue, it's a psychological issue. But if you didn't have a correct weekly reporting system, you wouldn't know that. You would just be going, right, this is my monthly results, and that's it. In the new Falcon Mechanics course, which is our all-in-one new course coming out on the 28th of November, I've got in lesson 6 a weekly reporting system. This is going to be so effective for you. You're going to know every single week the correct questions to ask, the right metrics that are going to teach you where you're going wrong and where you're going right. That's going to essentially help you progress so much faster. Risk management. Now, this may seem like the obvious point. However, let's look at the behavior of people trying to get funding. You'll see people over-risking to get a funded account and then reduce it down to 0.25% or 0.5% or even smaller than that. What is the point in trying to fluke an assessment just to essentially call yourself some form of a trader? For example, you see this pattern where people will buy a whole bunch of accounts to then technically pass challenges, and then they have 600K or 500K of funding to call themselves a high 5-figure trader or call themselves a 7-figure trader. So they've got 7 figures, but now they're trading 0.25%. So again, you cannot allow, it's not helpful to you, you cannot allow your ego to call yourself something that you're not. This is leveraged capital, you don't have 7 figures in an account for yourself, it's not the same thing, and it doesn't serve you apart from your ego, which then is not actually helping you progress to where you need to be. So it's really important that you've got correct risk management and you're not just trying to essentially fluke as many assessments as quick as possible. Slow is fast. If you keep a correct risk management in place, I have no issues whatsoever if you've got a tactic to be able to get funded and that you've got a buffer in the sense of when you're in profit, you risk 1%. And if you go down to break even, you have a recovery plan that you go to 0.5% as a tactic. That's absolutely fine. But if you're going in playing with the numbers and you're gamifying the whole thing, you're just turning into a gambler, and that's not going to help you. It's definitely not keeping you funded. Now, we talk about this a lot in Falcon. This is something we'll go under the radar very easily. Why would this be important for you keeping your funded capital? Well, if you don't have the correct ratios in place, so essentially you don't know how to manage your money, 99% of the population don't, so chances are you don't know how to manage your money effectively. So then what happens? You've got poor financial literacy, you might fluke a funded assessment, you may even be part of the small percentage that get paid out, and the reason why you don't keep funded accounts is because of poor financial literacy, you overspend on garbage, and then you're in a position where you're thinking, right, I've just wasted all of my money because I have no financial discipline, no understanding what to do with it whatsoever. I'm now getting very low on my capital. Oh, my current funded capital isn't paying me out, or I haven't got another payout or another withdrawal. Therefore, I now need to use whatever I've got left to potentially buy another challenge. Or you try to become very aggressive with your current funded capital, and then what happens? You lose it. So the side effect of having poor financial literacy is putting more pressure on your capital, where if you had good financial literacy, you would have already had these things in place, and you wouldn't put this unnecessary pressure on your funded account to try to force trades on a daily basis, trade when the market's just not there, because you've now got some form of timeline, deadline, unrealistic expectations and pressure on yourself to essentially get to 7 figures just to tell people that you're a 7-figure trader. All of that is actually causing you to lose your funded account and not keep it. Accountability is one of the most important things if you're going to progress. If you don't have people around you to hold yourself accountable, you're just floating around, coasting around, and likely picking up a lot of bad habits. Where if you're truly accountable to yourself and you've got other people that are going to check in with you and go, right, you said you were going to do X, Y, and Z this month. Have you done it? You check in on a week-by-week basis, or you check in on a monthly basis. The reason why accountability groups in Falcon exist is because it's been proven to progress you so much quicker, because you know that you've got someone else holding you accountable. You can't be someone who tries to gamify things. You can't be someone who just becomes reckless and then you just do it by yourself and realize you made mistakes, then you self-sabotage, because you have people around you that are checking in on you. The beautiful thing about that is you actually progress so much quicker. So think about it. If you had people looking over your shoulder, people that genuinely had your best interest at heart, do you think you would be reckless and then keep losing your funded account? Probably not. So the question you've got to ask yourself, do you have great accountability that is helping you? Psychology. You knew it was coming. You intuitively know deep down that it is psychology and it is the catalyst. If you study the top traders that have ever existed, they've all told you this, that the biggest difference in someone succeeding or not is going to be their mental framework. Because even if you looked at it from a mechanical point of view, there's this argument, if you're 100% mechanical, it removes emotion. If that's the case, why are funding stats absolutely disgusting? Even the data is telling you that being 100% mechanical does not remove emotion. It is ridiculous, and it's the biggest lie that is sold in this industry. You understand the value of money, you have an attachment towards money, whether you want to address it or not. And you can ignore it all of you like, but the reality is, in 6 months from now, the question you've got to ask yourself is this: in 2024, do you want to be in the same position where you're thinking that the way that you succeed is just you've got to be better at technical analysis and that's it? That's not the case. There are thousands of versions of you that are good at technical analysis, that know the market just like you do, yet they're not consistent. It's already reflected in the prop firm data anyway, so you can ignore it all if you want. It's not even my opinion, it is the data. People that get withdrawals will just lose their account. Why do you think that is? Well, it's all technical. It's emotional reasons. What I'm not saying is you don't need to be competent on the charts. I think you should be a phenomenal technical trader, and there is still so much work to do. And yes, as you become better at trading and you run the data, you will naturally become better and you can use that. However, we can't look at anomalies. Exceptions don't define the rule. If you say to me, Mark, well, I know someone that doesn't really care about psychology and is more data-driven and they've become successful. Yes, you're talking about one-offs. These are anomalies. They do not define the rule. These exceptions are just small percentages of people that you'll find they normally have a good mindset anyway. But the chances are you do fall into that category. And the once that you come to the realization that the biggest difference of you being successful or not will be the mental framework, that will be your next level. I've seen it. I've seen so many traders that have come into something like Rewired, for example, that don't trade how we trade. They're very competent when it comes to technical analysis, but they've not learned how to regulate their emotions, calm themselves down in the right moments, so they can't pull the trigger under the pressure. And then once they learn those tools, you conveniently see them go from 50K accounts, 100K accounts, suddenly to up to 500,000 and beyond. Why do you think that is? There is a version of you that can be calm under pressure. There's a version of you that will be able to deal with those bigger accounts. But it's not gonna be the same version of you now that's not done that training. So what I want you to think about, of all of the points that I've covered, if you don't have that in place, you do not stand a chance in 2024 and beyond to keep your funded account. You will be part of that statistics, and you'll be the complete opposite to the percentage of people that are actually winning and keeping their funded accounts.